Good morning to all traders and welcome to another daily market insights video provided to you, of course, by Orbex. Euro is heading down again after Trump threatened Europe with tariffs on a controversial Nord Stream 2 pipeline, which would increase gas flows from Russia to Germany beneath the Baltic Sea. Some euro pairs, though, named EURAUD, for example, remained intact despite the euro dive and the good employment data from Australia a few hours back, as inflation swaps point to negative rates. Meanwhile, oil's fall drags the Canadian dollar down, but in my opinion, that doesn't necessarily mean that the Canadian denominated pairs are going to be kept down as well. Before we jump to the charts, let's have a look what we expect today on the economic calendar. So we have the German inflation rates, very important data to look for the day. The PPI, and also, of course, the highlight is the interest rate decision from the Switzerland, then industrial production from Europe, and later in the evening we have the Canadian new housing price index, as well as the initial jobless claims in the US at 3:30 Cyprus time. Now, starting with the euro-dollar 3 hours chart, as you can see, we have a combination here of two corrective waves, okay? ABC, this is the interactive wave, and we have potentially another ABC over here. So how I see this is as this first wave, I see this as a flat, then we have the interconnecting wave X, and then we are probably most likely going to see an ABC irregular pattern, because this, of course, has failed to become a zigzag or come down here to create another bottom down there to be another flat or something like that. So we're looking now at this ABC and then another ABC ending anywhere between 164 and 166,200, with potentially the 164.35 being a very good level for bears to start stepping in. Now, on the MACD and RSI, we do get two signals which are opposing, and normally when we have such a scenario, this is supportive of the sort of shorter term signal that appears in the markets. So for that reason, I am expecting another move to the upside, and here is where we can start looking for sells. At the lower time frame, let me delete this quickly. The lower time frame, we see these A wave, B wave, and C wave. The A wave is an impulse with a Elliott wave triangle here. The B wave has completed at the 38.2 Fibonacci retracement, and now we're looking most likely prices to go at least to 164, a good psychological level, where we can expect a short pullback and then a move to the upside, or we can expect from that level, 164, the bears to start increasing their bets to the downside. Now on the Canadian with yen, I'm seeing this as a very good opportunity, because I think that we have reached a level where this is a bottom now, and as a bottom, and because we in the long term see this as wave 1 and this as wave 2 down here, then we're looking at wave 3 to crossing even above the 85 level. So in the long term, this is a very good opportunity, could potentially be. Now in the medium term, I see this as a early wave triangle again with A, B, C, D, E, 1, 2, 3, 4, 5, haven't completed down here. Now, if that isn't the case, okay, what could happen is that would be 1, 2, that would be 3, that would be 4, and we'll have an extension of this triangle with wave 5 down here, around 80, back around 80 again, and from here is where bulls will step in. If that didn't happen, of course, we're looking at a short pullback or retracement up to this previous level, around 81, and here is where we can start looking for bulls to increase their bets. Now, of course, the retracement could be anywhere between that level, okay? So we could actually see it happening right as we speak, around 81,300 or anywhere above 81. These signals on the RSI and MACD actually supported this impulse wave to the upside, and for that reason now, after this correction, I'm expecting another wave to the upside. because this in the short term I see as an impulse. And if we go down on the 1 hour, I have actually labeled that as well. So we have 1, 2, 3, 4, and wave 5 up here, around 82.50 or so. Of course, this would be a double top over here with an expected correction down there, and then we go for the continuation of wave 3 in the long term. Okay, so we get some supportive signals both on the other side of MACD. That's why this level might actually hold. And at the same time, it's also the 50 Fibonacci retracement of the medium wave from 80 to 82. So this is a 20 pip range with a 50 Fibonacci retracement potentially marking the low for this sort of move to the upside. So I want to thank you for watching for another day. If you like the video, of course, hit the like button. I would recommend, as always, that you keep an eye on our blog. It's where we'll cover the latest news, publish trading ideas, and provide all the necessary tools a trader needs.